Welcome to Retirement Income Options. This video will help you understand how to invest once you have chosen the variable benefit account. Our retirement and pension advisors can help you decide whether the variable benefit account, monthly pension, or combination of both is right for you. It is important to review the benefits and drawbacks of both options when making your retirement decision. There is no one-size-fits-all approach in terms of how much retirement income you will need. People retire at different ages, with different amounts of savings, and with different goals in mind. No two retirement journeys are exactly alike. However, there are some helpful concepts to think about that can provide general guidelines with respect to what your main sources of retirement income will be and what your spending may look like as you progress through retirement. We recommend you review our other videos on federal programs and personal savings. The CSS Pension Plan offers 4 different investment funds. Each have their own risk and reward characteristics. Which fund you invest in will be determined by your risk tolerance and the length of time you will spend in retirement. The other important thing to consider and to understand is the management expense ratio, also known as MER. The management expense ratio, MER, is a fee that is deducted from your investment's gross return each year to arrive at the net return. Investment fees are part of the cost of investing. However, over the years, the impact of fees on your investment can be very significant. In the case of mutual funds, this can seem like an invisible fee to the client, since it is simply deducted from the overall return of the investment. This slide emphasizes that fees do matter. In the example shown, a $100,000 account balance at retirement with a withdrawal of $7,050 annually and using a rate of return of 6.72%. You can see the difference that fees at CSS of 0.66% and the retail fees of 2.01% can make. This shows the funds running out at age 86 with the retail MER of 2.01% versus the funds running out at age 93 with the lower MER at CSS using the same original dollar value. Keep in mind, fees are not the only thing to consider at CSS. We want to ensure you understand your options and ensure you have the information to make an informed decision. We will provide you with the tools and resources to make those decisions. As an active member of CSS, your current investment allocation may remain the same, and you may continue to use the same funds throughout your retirement in your VB account. When you retire and choose the VB payment, you will have to continue to make investment decisions. It is important to understand your risk tolerance, as this will help you with your investment decisions. We have a risk tolerance estimator tool available online, which is helpful to our members to determine their personal asset allocation. The default fund is our balanced fund. It is a very diverse fund, which is where you should maintain your core amount. You can customize your account to meet your needs by holding more than one of our investment funds. Using any or all of the 4 funds, you have the option to set an investment mix appropriate to your own goals and circumstances and according to your own risk tolerance and investment comfort. The funds each have their own risk and rewards characteristics. Which funds you invest in will be determined by your risk tolerance and length of time in retirement. Keep in mind that the day you retire, you don't withdraw your entire CSS pension. These funds will be there to provide you for your retirement, which may be 20 to 25 years if you are choosing the variable benefit, which is why we recommend you maintain a core portfolio in the balanced fund to provide you with continued growth. Let's take a deeper look into our 4 funds. The first fund we will look at is our default option, the Balanced Fund. The Balanced Fund is a moderate risk, moderate return fund that is broadly diversified. If you never make an active decision on investing your funds, you will be invested in the Balanced Fund. This fund is suitable if you consider yourself to be a medium to long-term investor. It is also suitable if you wish to take advantage of the fund's professional management, broad diversification, and automatic rebalancing. As well, if you are seeking diversified exposure to global equities, fixed income, and alternatives. The MER, or Management Expense Ratio, for 2024 was 0.64%. The MER is a measure of the investment and operating costs, or fees, needed to offer the investment funds. The rate of return in 2024 was 8.85%. The 10-year average is 5.37%, but over the last 10 years, the return has been as low as minus 5.86% and as high as 13.02%. So you can see that periodically the fund can and will have a negative return. With the balanced fund, it does certainly go up and down, but it is important to remember not to time the markets and jump in and out with the fluctuations. It is time in the markets, not timing the markets, that leads to long-term success. The equity fund is suitable for members who are willing and able to accept a greater risk of short-term losses in order to have the opportunity to earn higher average returns over the long term. On occasion, equities have been known to produce negative returns beyond the short term. During these times, equities have earned returns lower than fixed income and short-term investments. The investment within the equity fund are the same stocks contained in our balanced fund. As you can see, the fund is entirely composed of US, Canadian, emerging, and EAFE market stocks. The MER for the equity fund was 0.43% in 2024, with a return of 13.32%. The 10-year average return was 7.23%. The bond fund is suitable for members who are willing and able to accept lower average returns in order to reduce the risk of short-term losses. Given its lower expected return, the bond fund may not produce sufficient earnings over the long term to produce an adequate retirement income. Because bond prices tend to decline when there is an expectation for interest rates or inflation to increase, the bond fund can potentially suffer short-term losses. The MER last year was 0.48%. The return was 5.15%. The 10-year return was 2.53%. As you get closer to retirement, you may want to consider taking less risk, and you could use the balanced fund and bond fund to do that. The bonds, mortgages, and emerging market debt in the bond fund are the same investments as contained in the balanced fund. The money market fund invests entirely in short-term investments, such as commercial paper and bankers' acceptances. It is a low-risk, low-return investment option. It is not recommended as a long-term investment for your pension funds. You may want to consider this fund as you approach retirement to protect yourself from a possible negative return if you plan to convert your pension funds into the traditional monthly pension. If you are considering the variable benefit option at retirement, the money market fund is a good fund to use to create a spending reserve to protect a portion of your account against short-term market losses during retirement. We do suggest having 1 to 3 years of expected withdrawals invested in the money market fund as you are approaching or nearing retirement. If you choose the variable benefit as your retirement income option, there are ways to help protect your income in retirement. One of those is by using your CSS money market fund to maintain a spending reserve. When using this strategy, you would withdraw your VB payment from the money market fund. Then at least annually, you would review the amount withdrawn from the money market fund and replenish it. If your balanced fund is down, you may choose to wait to replenish the money market fund until the markets recover. This is a strategy that CSS recommends to help you reduce risk and preserve capital. For example, if you plan on a monthly income of $1,000, you would move $12,000 to $36,000 to the money market fund. Then each year, you would contact an advisor to discuss moving another year of withdrawals to the money market fund to replenish your spending reserve. Remember, you will need to review your VB count at least annually to maintain your 1 to 3 years. We also suggest that you continue to review your plan. If your funds are being depleted faster than you anticipated, and it looks like the funds may run out too quickly, you may need to revisit your plan or adjust your withdrawals. Remember, you are in charge of your account, but we are here to help. If you want to know what type of investor you are, you can access the Risk Tolerance Estimator on CSS Pension Plan's website. There is a series of questions to answer, and once you submit your answers, it will provide you with your risk tolerance profile and a suggested asset mix. You will want to go through the estimator periodically, as you may answer the questions differently at different stages in your life. On the homepage of the CSS website, there is an Investing tab that provides all sorts of good information about the 4 funds. There is also information about investment risk, market timing, and investing in retirement. You will also find our quarterly investment report, which provides a good overview of the 4 CSS funds. Ultimately, you are responsible for your investment choices. We do suggest you review your investment instruction decision with a CSS retirement and pension advisor or a qualified financial advisor at your credit union or financial institution to ensure it conforms with your overall retirement plans. When you are ready to change how your funds are invested, please note that you can now submit investment instructions online through the My CSS Pen portal at no charge. You can still submit paper-based investment instructions, where the first 2 per calendar year are free, but there is a $75 processing fee after that. Instructions submitted and received by 12 noon Saskatchewan time are implemented as of market close that day. Please refer to the Variable Benefit Account video to learn more about VB payments and what to do as you approach retirement. Thank you for watching our video. Still have questions? Please do not hesitate to get in touch with us. We're here to help.